Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. We are back with more Berkshire Hathaway and Warren Buffett content. I'm Jason Hall. This is The Smattering. I'm joined again by Tyler Crow, and we are going to talk this time about what we think might be Warren Buffett's one FOMO stock sector, and that's the oil and gas industry. Hey, Tyler, how's it going?
How's it going, Jason? So, as you know, I've been following oil and gas for a long time. When I look at the Berkshire Hathaway portfolio, anything oil and gas always stands out to me.
Yeah.
So it's interesting to me because Berkshire Hathaway has had a very on and off relationship with oil and gas for decades. Owned ExxonMobil in the 80s.
Owned Exxon in the 80s.
Owned Exxon. Sorry, just Exxon. It merged into it. Sorry, we've got to get the details right.
This is more than 23 years ago, Tyler. We have to.
Yeah,
But that's the point, right? It's been very. When we talk
it's
about
a very
Warren
different
Buffett,
industry.
it is, but when we talk about Warren Buffett, we always bring up like the American Expresses and the Coca-Colas and these companies that, and again, Warren Buffett himself has said that his preferred holding period is forever. And again, the key there is preferred. It doesn't always play out that way. I want to make the case over the past, really, we can look at the past 15 years of the kind of the postmodern oil and gas industry to talk about why this seems like it's almost been sort of a FOMO, why I think this is his FOMO industry. And it's going to be your job to tell me why you think maybe it's different this time. So let's start.
That's a tough ask.
I know I'm setting you up for failure there. This is from the Berkshire Hathaway 2008 shareholder letter. So it came out in early 2009. And I'm going to highlight it. I told you in an earlier part of this report that last year I made a major mistake of commission and maybe more. This one sticks out. He says, without urging from Charlie or anyone else, I bought a large amount of ConocoPhillips stock when oil and gas prices were near their peak. I in no way anticipated the dramatic fall in energy prices that occurred in the last half of the year. Now, I'm not going to read the rest of it, but what I want to talk about next is that he's talking about a mistake he made in this oil cycle and talking about when oil prices were very high. And when he wrote this letter again in 2009, we were approaching the bottom of the market. The economy was still in recession, deeply in recession, was still far from recovering. There were still questions. This is still a year, Tyler, before double dip recession even became a thing. And he's talking about this mistake. Okay, of course, this was ConocoPhillips. And it was a bad investment, right? The timing was bad, but the time of the selling was bad as well. I'm going to highlight one more part of it here. I'm going to beat Buffett up a little bit for not getting his timing perfect. Well, what happened after the fact? We're just going to talk about oil prices. This was when Buffett wrote the letter, right? This is when Buffett wrote that letter. This was the next 4 years of oil prices, right? So this is when he was buying on the way up here. This is when he was saying this was a big mistake. And this is what happened. So it's easy for us to apply some hindsight logic here. But first of all, again, this was part of his kind of occasional love affair.
You want me to give two other examples of him buying at really high oil prices, then selling low? Because that's what he did with Exxon in the 80s. And then when oil prices tanked in the 90s. It's what happened when he bought Suncor in the early 2012, 2013, right before oil prices tanked.
And again,
it's happened before.
Did it with Exxon, did it again with ExxonMobil. So again, you look maybe 5 years after these mistakes, the mistakes with ConocoPhillips were made, bought ExxonMobil and Suncor as well. And the thing with ExxonMobil in particular that was bad, bought it right after coming out of that triple digit oil. So 2014, 2015 period. And this was a period that ExxonMobil was, I encourage people go back and look at our channel for other videos I've done with Tyler looking at ExxonMobil. It was a bad time to be buying the business because of the prior decade and some bad acquisitions that the company had made, overpaying for some low return assets. And the ExxonMobil of today has sweated off all those assets and really gotten lean, but bought the business, got really impatient, and after a couple of years said, okay, this was a bad bet. I'm selling it. I'm moving on. Now, here we are again. Let's fast forward to today. You look at the Berkshire Hathaway portfolio, and two stocks really jump out if you're looking at oil and gas, like you said. Chevron is one. It's one of the largest holdings. It's about a $29 billion position now. And the other one, Occidental Petroleum.
Occidental Petroleum is a peculiar one because this wasn't just like he looked at oil prices and said, I think it's a good time to buy oil and gas companies, and went to the public markets. Occidental Petroleum was a unique situation where he provided special financing for a very risky acquisition where he got, I don't know if people remember, like during the Great Recession, where, what was it, warrants on Bank of America that were.
The two that really jumped out, and I think they were important to like instilling confidence in investors and in the American public. And again, you mentioned Bank of America was a big one, but did the same thing with Harley Davidson. Did something similar.
Yep, got what are known as perpetual preferred shares. So basically got dividends regardless of what happened with common shareholders. And then some very, very attractive priced warrants that would allow him to make purchase of stock well below market prices where they are today. Oil prices swung up and it's been a very good trade for him. But this was like a very unique situation where probably would have come out on top almost anyways, but very different from a lot of the open market purchases that he's been making. Chevron, on the other hand, has been an open market purchase, buying common shares. And it is very interesting to see with Buffett's history in oil and gas, there's almost like a part of you that says, this has been a bit of a blind spot for him. Is that not a good thing? Or perhaps he has learned his lessons enough time to know, get in a little bit earlier when companies haven't made that transition to making big splashy acquisitions and are just in the, we're going to harvest this portfolio for cash, because that is where the oil and gas industry is right now. And if you look at ExxonMobil, Chevron, and a litany of other companies,